Good morning and welcome to the Coffee and Cap Rates podcast, your go-to source for New York City's latest commercial real estate insights. This program is brought to you by Ariel Property Advisors.
Hi, everyone. This is Shimon Shkury with Coffee and Cap Rates here with Ariel Property Advisors. And I have two esteemed colleagues here from the Bronx, Jason Gold. How you doing, Jason?
Doing well. How are you, Shimon?
Doing well, thank you. And Daniel Mahfar as well. Daniel, how are you?
Hi, Shimon. Thanks for having me.
So I'm excited to hear both of you tell me more and tell the audience more about the Bronx in 2025 and what we can see for this year, for 2026. If you look at the numbers and specifically at our reports, you see a 46% increase year over year in dollar volume. It's drastic. It's $1.8 billion. And the two components that I think we should focus on are the multifamily asset class, which went up 66% in terms of dollar volume, and the development market, which went up 26%. And I'd like to start with you, Daniel, talking a little bit about what we've seen in 2025 in the multifamily market in the Bronx specifically.
Sure. So I think what you see in 2025, you're looking at a price per unit average of about 105 a unit, which is the lowest in the past 7 years on average since 2019. You're looking at averages anywhere between 150,000 unit to 170,000 a unit. But unfortunately, even with the 105,000, which would be a record low for over 10 years from now, the macroeconomic conditions, the interest rate environment, as well as housing court issues in terms of boosting collections in the Bronx to be an owner of this product, we are seeing forward sales that are going to be dropping from current conditions. Between, as well as Mr. Mamdani's administrations, where he's planning to lower RGB raises to 0%. But GRMs last year were around 6 times. We are seeing trades now hovering around 4 times multiple, plus or minus, depending if it's a walk-up, if it's elevator, how are violations, how are arrears, many different obstacles that owners are working with today, and we do expect pricing to be even lower than last year, even though last year was a record low in terms of pricing.
Yeah, I think it's a very good insight, and these insights, Daniel, allude to the fact also that the majority of what traded was either rent stabilized or affordable housing. About 2/3 of every single building, every dollar volume that traded in the multifamily asset class in the Bronx specifically were rent stabilized housing. And as we all know, it suffered from HSTPA, from regulations. It suffered from what you said, which is collections. Post-COVID, collection issues are real, specifically in the Bronx. It suffered from the increase in interest rate and in general drastic growth in expenses compared to the rent guideline board growth. So we have real distress in many cases, not just financial, but also physical, specifically in the Bronx. And one other thing that you and the rest of the team is speaking about are the average rents per unit. If they're below 1,400 or 1,300 in many cases, that is an issue. Again, not able to operate. And so the majority of what traded was rent stabilized, and that's why you're seeing the pricing so hard.
I think that's an important point,
year over year.
Shimon, that you mentioned the $1,400 or $1,300 a unit in rent, that a lot of these rent stabilized buildings are locked in at that pricing, that unfortunately between insurance and just general operating expenses and the tax bills on these buildings, that's pretty much where their operating costs are. So a lot of these units are pretty much around break even. If you buy it all cash without a mortgage, those units are somewhere around a break even number when the rents are so low. So I think that's a very important point that you brought up.
And on a positive note, we still have buyers, and the better the building, the deeper the bench. But even with the more challenging buildings, it's just pricing, and there are buyers out there. So let's shift into the newer stuff, development. What have we seen? Because a lot has happened there. What have we seen in the Bronx specifically in the past year, Jason, development?
Yes, thanks, Shimon. Development for 2025, we saw a significant uptick. We saw a 25% increase in transaction volume, which was one of the highest, the second or third highest year in dollar volume and second highest in transaction volumes in the market since 2010. A lot of that plays a role with the City of Yes that was announced in December of 2024. So a lot of developers looking for sites that they can build and utilize 485X, as well as getting comfortable with the City of Yes to build under 99 units, whether that's buying a larger lot size that they can utilize and build multiple 99-unit buildings and implementing the City of Yes. What I think we're going to see moving forward is a lot of people getting comfortable with the City of Yes as they have been getting comfortable with the 45X and implementing the City of Yes on their new underwriting and their development projects. What's interesting enough is that a lot of people are still driving the fact of on the price per buildable square foot across the Bronx is averaging about $106 a square foot, which is really right in line with a little higher than the 2024 market. And we're going to continue to see a uptick in development site transaction, dollar volume, and the interest level in development throughout the borough.
That's pretty incredible. So let's wrap this up and say what's going to happen in 2026 based on what we know, and we almost are already in the first quarter. So Daniel, multifamily, you alluded to lower valuation specifically for rent stabilized, but what do we see from a buyer perspective? What are they looking for? Why are they buying, even if it's rent stabilized or affordable? What are they looking for?
I think pricing will be at its lowest level in over a decade, but I think there's still a very deep bench of local owners who have been owning and pounding the pavement in New York City for many years, who are taking advantage of all-time low pricing.
I think we're going to continue to see an uptick in activity for the multifamily asset class because, yes, people want to still buy multifamily rent stabilized product because we're hitting a low of nearly close to 20 years, 15, 20 years, and buying really at the lower level. People are still interested in the multifamily asset class throughout the Bronx.
Yeah, and I'll add to that, to both of you, that I think that there is also the mortgage maturities wall, which we're talking about in the report. And
Correct.
that's driving a lot of these transactions. People have to sell, lenders have to transact in many cases, and we'll continue to see that in a bigger way in 2026. On the affordable side, it's a little bit more opportunistic or situational, I should say, and more strategic. But even there will be some sales that need preservation, that need the city to help a new owner developer to preserve these buildings and these units. And in the free market-ish or newer buildings, we will see some transactions, but as we said before, not as many compared to rent stabilized and affordable when it comes to the Bronx. And what about
Shimon, I would
developments?
just to go on the point of the prediction for this year for multifamily, I predict that there will be more transactions and more units sold this year than last year because you're looking at pricing from 15, 20 years ago that people just cannot believe that they can own multifamily in New York City at this basis comparatively to the rest of the country when you have a city that has a under 2% vacancy. The intangibles are there and the opportunity is there. It's just a matter of when will the rules change to be able to make more economic sense of higher valuations.
Thank you, Daniel. And let's wrap it up with the development. Where do we see it in 2026?
I think we're going to see a continued trend from the 2025 market as people got familiar with the 45X last year, and people are going to get a little bit more familiar with the City of Yes. We're going to see an uptick in development. We're going to see uptick in interest level. We're already seeing it year to date. Call it 2 months into the year. We've already transacted about 2 or 3 development sites and have put a lot of development sites in contract. But the development sites that we have, we're seeing a significant amount of interest, offers, LOIs, and I think that's going to continue throughout the year.
Sounds good. Thank you both. Thank you, Daniel. Thank you, Jason. And this is Coffee and Cap Rate, the Bronx.